Time to check the rules.
Smokey, this is not Nam. This is bowling. There are rules.
Congressman Darrell Issa wants answers when it comes to trading private shares in non-public firms like Facebook.
What are you doing?
Checking in to see how it's going in Bosnia.
Bosnia. They don't have roads, but they have Facebook.
But first, he's talking to Squawk. Go to Darrell Issa now. The House Oversight Committee will examine regulations on the trading of private securities today. SEC Chair Mary Shapiro among those set to testify. Here now with the preview. Representative Darrell Issa, chairman of the committee. What's your basic thrust on this, Mr. Chairman, that this is another uniquely, really kind of an American quandary we're in right now? We'd like to get, this is probably could be a good thing for capital formation, but we want to do it right. Is that it?
Well, pretty much. As you know, you're limited to, if you're a private company, to 499 investors, and you can't do general solicitation. And when we look at qualified investors, we say, wait a second, they should be exempted. You just went through a couple examples. You know, when General Motors buys all or part of a company, they don't need the SEC to protect them. They've got the assets. So part of what we're trying to do is reverse a trend of 20 years and more than 20% less companies listed publicly, but at the same time recognizing that if we're going to have less public companies and a higher barrier to becoming public, then we've got to reform the private market to make it able to raise more broadly based capital in order to allow small businesses to have an opportunity to get medium-sized investors.
Yeah, I mean, it sounds good. You want these companies to get capital, but I mean, there's a difference between private and public. After this, I can't really tell what the difference is. They're like some kind of odd, like strange hybrid.
Well, what's going to be the difference, if we lift the 499 cap, we're not going to lift the quality or the experience or the financial wherewithal of those who can invest. You're still going to have to be at least somebody who has very large income and disposable investment capital. So we're not allowing the John Q. public to buy 100 shares, but we are looking at, and Chairwoman Shapiro has been very forward-leaning in this, if the investor is qualified, should the company also have to be limited? And I think the answer clearly is no. The cap is artificial. Well, the quality of investors who are allowed to invest outside of SEC oversight of public companies should continue to be controlled, and that's what we're hoping to get to.
I mean, I have seen, I remember auction rate preferred. These had to go only to really qualified investors. That didn't stop these people from just massive litigation after that went south. I mean, that doesn't excuse a firm from culpability when things go wrong, right?
Absolutely. If you commit fraud, you commit fraud. But the idea that you tell your investors once a year how you've performed is very different than the bright lights and the huge reporting requirements the SEC has for a public company. Back in the 80s, before this downward trend began, a $15, $16 million company with a bright future might go public. Today, a $100 million business with good profits is unlikely to be able to go public because it represents $2 or $3 million of their profit disappearing just for compliance. That's not in the best interest, and I think the trend for 20 years of a downward capital coming to the public market tells us that big companies will continue coming to the market, but America is not made up only of large companies. They're made up of great ideas, of people who can put together hundreds or thousands of investors and promote them and grow to where they might go public. But right now, that leap is filled by very, very sophisticated funds and leverage buyout groups and so on that are, in fact, between the investor and the small company. You know, you hear all the time about mezzanine financing and all these other activities going on where Goldman and other companies are facilitating companies staying private rather than allowing those private companies to raise capital more directly.
Yeah, foreigners, I remember that. This all harkens back, I guess, to that, didn't it? And the intense media coverage, and they were asking the same questions at that point: what's private and what's not? And so that Goldman just said, "We'll just go foreign." Right now, is that bad for us? I guess it is. If it's going to be a big winner, you'd like to have that the qualified investors in this country.
Well, the most qualified way to do good oversight by the SEC is to have them under their watch, not fleeing the United States, so they don't have to be. We want to have qualified investors register here in the U.S., buy in the U.S., and we think that with the chairwoman, we can reach a compromise that she's comfortable with, that she can either do administratively or we can do with legislation together.
You made a case about free speech, I think, too, didn't you?
We did. The general solicitation is a real question of whether or not the SEC can limit somebody's ability to at least put out legitimate, honest information about an opportunity. As you know, there's a lot of ways to work around it, but the company doesn't have a way to work around it. Goldman Sachs and J.P. Morgan have ways to work around it. If you are an investor group, you have ways to work around it. But if you're just a company that would like to get a couple of thousand qualified investors to look at what they're doing and consider investing, you have to go through an intermediary. We don't believe that under free speech that should be the case. But let's understand, this is a carefully thought out question to be answered in cooperation with the SEC. We hear that from her today.
One last question, Congressman. Sheila Bair's announcement yesterday that she's going to step down. I think there are now vacancies at the FDIC, the OCC, the Fed's chief oversight person, and of course, consumer protection. When are these going to start to get filled, and how quickly?
Well, this is one of the limitations of this administration. They've been slow to fill key vacancies, and some of them, quite honestly, we believe allow for the mix to be favorable by their absence, and we disagree with that, obviously. We'd like to have these all, at least have the names put up. Right now, the Senate is very favorably disposed to act quickly on them, and we're hoping the President will fill these vacancies. Remember, these are term vacancies, so to a great extent, if you don't fill them, all you're doing is delaying the beginning of a relatively long term in some cases.
All right. Congressman Issa, we appreciate your time this morning, and we'll be paying attention to what comes out of the hearing today. Thank you.
Thank you.
Okay, you're welcome.